Hello, everyone. Thank you so much for taking our time to join us in this webinar. We are very honored to have you here. Today, we delve into the critical realms of auditors' credibility and its profound impact on public confidence. Be rest assured you are in for a very insightful and interesting session. I am Olayori Peace. I'm an audit associate and I will be the moderator for the day. Joining me on this webinar are three seasoned professionals, Eben Jewels, Oluwaseyi Alabi, and Deborah Odubayo. This webinar is hosted by Stransact Chartered Accountants. Stransact is the correspondent firm of RSM Network in Nigeria. RSM is the sixth largest network of accounting firms globally. We offer the quality of a big firm and the attention of a small firm. The agenda for the day. We'll be going through the introduction, understanding auditors' credibility, threats or challenges to auditors' credibility, recent high-profile audit failure, public confidence in audits and its importance, and our conclusion. Do note that the question and answer section is open for you to put in your questions, and your questions will be attended to shortly after our speakers round off their session. Audit failure is a global phenomenon and it cuts across jurisdiction. Two notable cases in the past are the case of Enron and WorldCom. This has made the investing public to ask, where were the auditors? Nigeria is not left out in the case of this audit failure. As we can recall the CBN stress test, which happened in 2009, where Oceanic Bank, Finbank, Intercontinental Bank, Afribank, and Union Bank failed this stress test. These banks had one thing in common. They had just been given a clean bill of health by their auditors. Arguably, one of the most recent audit failure is that of the Tingo Group in 2024. The question remains, what factors might have contributed to these instances of audit failure? How can auditors maintain public confidence? And in what ways could auditors enhance their performance in those cases? These and many more questions will be answered in today's webinar. Our first speaker for the day, Deborah Odubayo. She's an audit associate in the Accounting and Attest Unit. She's a true luminary in the field of audits. She joined us with a track record of relentless pursuit for excellence. She will be taking us through everything we need to know about auditors' credibility.
Thank you so much, Peace. So in 2022, audit failures led to audit firms paying fines adding up to £32.8 million. This figure increased by another £400,000 in 2023. And when legal costs were factored in, auditors paid up to £40 million due to audit failure. This shows that recently auditors have been failing in their duty as auditors. The quality of audit has been dropping drastically, and so has competence of auditors. It's important that auditors are able to redeem themselves. When people hear that a statement has been audited, they expect that it is free from material misstatement. So they make decisions using this opinion. So when they turn out to be misled, then they stop trusting auditors because they've suffered losses due to this information. Auditors can also in turn suffer liability due to this information. So that is why it's very important that auditors become more credible. Today I'll be discussing some behaviors that when auditors imbibe them into their audit, they will become more credible. The first thing I'll be discussing today is independence. It is very important that auditors we are seen as unbiased, as fair, and as uncompromised. In fact, IS 220 says that auditors should be independent both in appearance and also in mind. Being independent in mind as an auditor, it means that you are objective, which is very important. It's very important that you are able to use your professional skepticism and judgment in your audits. This way, you're able to detect areas of misstatement, areas of risk. You're able to correct these areas. Without doing these corrections, you can't have can't have done a quality audit. Another behavior that auditors should imbibe is definitely competence. Competence is what enables you to carry out quality audits. When you have the necessary skills, the knowledge, the expertise to actually do audit work, you are said to be competent. When you are very familiar with standards, accounting standards, auditing standards, you know what the requirements ask of you, then you can be a competent auditor. Finally, I'll be discussing transparency. Auditors need to be open and honest in their communication. It's very important that you're able to be clear in communicating with all stakeholders, not just the directors. Everybody should be able to understand what you are seeing as an auditor. It should be accessible, it should not be vague or ambiguous. Ensure that you are open and honest communicating with all the stakeholders that are in your firm. But with this communication, there are some threats that you have to ensure that you avoid, which includes self-interest and familiarity threats, because these threats will actually impair your independence if you are not careful. So I'll conclude this section by saying that while you have to be honest with your clients, ensure that you place safeguards in place to ensure that you don't suffer from this threat.
Thank you so much, Deborah, for that session. One of the things that I would say that I learned from that would be that as an auditor, you're expected to be independent, you're expected to be competent, and you're expected to be transparent. We'll be having a 10-second poll now before our next speaker comes in. The poll will be showing on our screen. Please, let's do well to engage in the poll. Thank you so much for your engagement. The question is consequences of wrong financial statements. That's the heading. And the question says, all of the following are consequences of incorrect financial statements for companies except one. Loss of investors' trust add 7%. Damaged reputation adds 0%. Financial mismanagement add 3%. And stable credit rating add 90%. Taking us further this day is Oluwaseyi Alabi. Oluwaseyi Alabi is a professional accountant with over 6 years of experience in statutory audits, forensic audits, and financial reporting, and so on. Oluwaseyi Alabi is a senior consultant in the accounting and attest unit. He will be taking us through everything we need to know concerning threats or challenges to auditors' credibility. Let's not forget that we should put our questions in the question and answer segment, in the question and answer section, so that our speakers will be able to attend to them shortly after their session. Thank you.
Thank you very much, Peace Olayore, for that. Right now, I'll be taking us on the threats and the challenges to auditors' credibility. Now, the very first key thing we need to understand is the fact that the concept of auditors' credibility, relies on the reliability of the information that is being provided by an auditor. In another way, we can say that it's focused on the reliability of the auditor's report, which is being provided at the end of any audit engagement. So the key question we need to ask ourselves here exactly is, what exactly are those things that forms threats which results into unreliability in the auditor's report which is being provided? The very first thing we have here is the conflict of interest. I'm very sure very many of us are very conversant with this word, right? So when we talk about conflict of interest, we are saying that the auditor is having interest in the entities auditing. Take a very good example. We're saying a situation where the auditor is having interest in the entity, or maybe is even having a direct, impact in the day-to-day activities of the company. Or in another way, we can say that maybe it's being involved in the decision-making processes of such a company or an entity, right? We'll say that such a person cannot, in a way, also be the auditor of that same company, because everything they would do, the level of independence, right, we believe would have been totally compromised. I would say that one key thing we do here in Stransact is at the beginning of every engagement is to fill what we call an auditor's independence declaration form. And the essence of this is, to affirm that the audit team has no relationship with the client. The very second point I have here is poor professional conduct, right? We all agree with me that as an auditor, right, we're expected to conduct ourselves with the highest level of professionalism. We're expected to conduct ourselves with the highest level of professional behavior, also imbibing and using the concept of professional skepticism in our engagements with our clients. So in another way, I would say that as an auditor, we're expected to be honest, to be candid, and to be straightforward and maintain the concept of integrity with whatsoever it is we're doing with our clients. Take, for example, an auditor that is accepting bribe. What do we think in such a situation, right? So the independence has already been compromised. Okay, another key thing we need to understand here is the fact that we believe that everything that makes up the report of an auditor, the auditor should be able to defend it. That explains and that tells us that such an auditor, right, and such information that is being put there on the audit report is being credible and can be easily relied upon. The very key third point we have here is perceived bias, and I will be linking this with one of the points that Deborah, listed the other time when he was taking us through a part. Now, auditors are expected to be independent, both in mind and in appearance. An auditor that is being independent in mind is saying that the audit report is not being influenced by any external factors or any external condition. Take, for example, maybe familiarity threats or maybe intimidation. Any auditors that fall through for an intimidation, we believe such a report will be totally incredible and such a report will be totally unreliable. The second part is saying auditors has to be, independent in appearance. For an auditor that is independent in appearance, we believe they should not saddle themselves with things that will make people start believing or thinking that the auditor's independence has already been compromised. A very good example is the case study of Cadbury in 2008. One of the key things that the auditors was charged with was the fact that they have been auditing the company for over 40 years prior to 2008. And the key question we ask ourselves here is, even if I'm an external party, I might start believing maybe there is a particular relationship, maybe an extra or special relationship between the audit firm and even the client, as the case may be. And these are some of those things that increase that level of perceived bias. The last point I'll be talking about is poor quality control, right? So I'll say that in Stransact here, we conduct thorough audit job. We use the right set of audit processes. We use the right set of audit procedures. And most importantly, we communicate our findings to those charged with governance. Another key thing we try to do here is to comply with professional standard as being given by the International Standard on Auditing and International Financial Reporting Standard. We also constantly update ourselves just to ensure that our audit reports are top-notch. One other key point I will also mention is level of review. We have multiple set of reviews here, and the essence of everything is to ensure that the audit report is free of material misstatements.
Thank you so much, Oluwaseyi. Really appreciate that. Thank you for taking us through the threats or challenges to auditors' credibility. So one thing that I learned from this is also that as an auditor, you should be independent in both appearance and in mind. We'll be having a second poll now. The other poll we had, I forgot to give us the answer to it, and that will be done now. Consequences of wrong financial statements. All of the following are consequences of incorrect financial statements except one, which is stable credit rating. I will launch the second poll now. Please do well to engage. The question is, in your opinion, what factors contribute most to enhancing auditors' credibility in the eyes of the public? Transparent communication, independence from the audited entity, stringent regulatory oversight, continuous professional development, and all of the above. All of the above adds 63%. Transparent communication adds 16%. Independence from the audited entity adds 19%. Our answer to this will be all of the above, because if we check the question, it says, in your opinion, what factors contribute to enhancing auditors' credibility in the eyes of the public? You should be transparent in your communication. That has been said by Deborah. You should be independent. Deborah also said that there should be stringent regulatory oversight. Sheyi mentioned that, and continuous professional development, which has been mentioned by Sheyi. Thank you so much for your responses. Do not forget that the question and answer section is open for you to put in your questions, and our speakers will attend to them shortly after their session. Taking us further this day is Eben Joels. He has over 20 years of experience in audit, tax, and advisory services. He is the general partner at Stransact. Eben Joels will be taking us through recent high-profile audit failure and public confidence in audit and its importance.
Thank you very much, Peace. Thank you, everyone that has joined us. I think before we start talking about recent audit failure, it is important for us to understand what audit failure means in the first place. Audit failure occurs when the auditor gives an incorrect opinion, especially where the auditor states expressly in his audit opinion, in his or her audit opinion, that the books of a company are properly kept and that there are no material misstatements. And a few months later, you find out that the company's books were not correct and that there were material misstatements in those financial statements. You would say that that is an audit failure. And of course, that has direct bearing on the credibility of the auditor. There is a major reputational damage, and the credibility of the auditor is not the only consequences of that failure. Sometimes people's livelihood are upturned, companies are destroyed, and people lose their jobs. And one of the most famous one that happened in the world's largest economy, the United States, would be the case of Enron in 2001. Enron's auditor then, Anderson or Arthur Anderson, paid the price because the company, the firm was subsequently stripped of his audit license, and the firm dissolved globally at that time. All of this led to significant changes in regulation of audit practice, especially for public companies that are listed in the United States, and of course the rest of the world borrowed from that. Today, if you audit a public company in the US, or even if you audit a subsidiary, you probably would have heard of Sarbanes-Oxley law. And Sarbanes-Oxley created a lot of regulatory bodies, but in particular, it created the PCAOB, the Public Companies Accounting Oversight Board. So coming home from 2001, in 2008, Cadbury Nigeria, which was one of the best performing company on the Nigerian Stock Exchange at the time, the parent company of Cadbury Nigeria, their parent company in the UK, raised an alarm that the financial statements of its subsidiary in Nigeria led to an investigation, which led to the removal of the CEO of the firm at that time, and it brought a lot of negative publicity on the auditors of category at the time, and of course, on the entire audit profession. Now, you will think that after that, auditors would learn their lessons and be more careful. Sometime in 2009, the central bank governor, the new central bank governor at the time, conducted a lot of assessment on all the banks, and a lot of banks disappeared. And some of these banks were being audited by some of the biggest audit firms in Nigeria. And the key issues that the CBN stress test revealed, liquidity issues, you will think should be at the forefront of the audit findings. Uh, so what are the issues that came out of this? A lot of these banks disappeared. Their assets were taken over by a body that was created at that time, AMCON, which is still with us, which should have been wound up by now anyway, and is still with us as a consequence of that. Thereafter, there's been regulatory intervention with respect to preventing this. One of them is mandatory rotation of auditors by banks. You will think that there are no more recent examples of audit failures, but this one is very recent because between November and December 2023, there were news that this company called Tingle Group, which is listed on NASDAQ in the United States, that the CEO of the company has been charged with fraud and fraudulent reporting of financial statements. Now, you will think that why are we talking a company listed in NASDAQ, on NASDAQ in the US? But this company's operations, the bulk of it was supposed to be in Nigeria. They were supposed to have 9,000 farmers, and they were supposed to have a mobile company, and with a lot of, and a food processing company in Nigeria, and their auditor was a Deloitte entity based in Israel. Now, I tell people that we all need to be very careful in spotting a Ponzi scheme today, especially those of us that say we are auditors. Our responsibility is not only to our clients that are paying us fees, our responsibility is also to our friends and family in being able to advise them. It is unconscionable for a person that is trained as an auditor to be caught investing in a Ponzi scheme. You should be able to smell them from a distance. And because of the level of economic depression that we have in Nigeria, and with all due respect, the penchant for most people to make quick returns, there is a proliferation of such Ponzi scheme masking as one investment or the other. If anyone is asking you to bring money to buy into an investment that is tied to things like a fish pond, things like real estate, you need to wear your professional hat of skepticism, wear it properly, and ask yourself whether this is not a Ponzi scheme. One of the skills that a competent auditor should possess is the nose to smell from a distance schemes of this nature. So I mean, coming closer home, but not to 2003, we've all heard of the fuel subsidy fraud. We're paying the price today because most of the fraud uncovered during the fuel subsidy, just before the fuel subsidy riots, if you like, or protests of 2012 or thereabouts in Goodluck Jonathan's regime. There was subsequent after that, there was an investigation in all the importers at the time. And a lot of companies were indicted, some were convicted. One of those convicted for fuel subsidy fraud was this Ontario Oil and Gas. Well, as you and I know, most of these companies are still existing because their owners are highly placed, politically exposed persons. Some of them are still holding civic offices in Nigeria today. But what is of concern to us is what is the role of auditors in this? Do auditors willfully certify financial statements that are fraudulent in order to collude with the perpetrators of these schemes? I think the answer is no, we do not, because as auditors we are trained on certain fundamental principles that prevents us from certain kind of behavior. So what is our responsibility as auditors? Our responsibility, again, is built on these fundamental ethical principles, which is it permeates all the major accounting bodies in the world, whether you are talking ACCA or you're talking CPA or you're talking ICAEW or you are talking ICANN. These ethical principles are enshrined in us. The principle of integrity, to be straightforward and honest. Now, some of this, even though professionally you're required to be straightforward and honest, there are a lot of people who are ordinarily not straightforward and honest in their personal lives. And ideally, such kind of humans should not be drawn into the practice of auditing. But we have some of them. And but you who is looking for the right auditor should pay attention to these characters. The quality of their business judgment. Is it independent? Is it objective? Is it uncompromising? What is their professional competence? Now, competence is one thing. It is very easy to pass exams and get a certificate, but you're competent 5 years ago doesn't mean you are competent today if you do not continue to learn and pay attention to developments in your field. Auditors are required to not just attain professional knowledge, but to maintain their knowledge and stay current. Auditors are supposed to be confidential. And more importantly is our professional behavior. Shei mentioned that an auditor should not be seen to be giving bribes or accepting bribes. But if you're talking bribes in, say, our tax environment, for example, you will be shocked that some of the people involved are auditors. So, you know, there's certain minimum professional behavior that is expected of everyone that is an auditor. But as we've been saying, these things have changed. And I told you about, we talked about AMCON, how AMCON came to be because of bank failures at the time. But in addition to, in Nigeria was changed. And then we talked about how the failure of Enron gave rise to Sarbanes-Oxley, which created the PCAOB, which is a very important body in regulating auditors in the United States today. Similarly, in Nigeria, our Nigerian Accounting Standards Board, as it was then, has transmuted into a stronger regulator called the Financial Reporting Council of Nigeria. And such things as licensing of audit firms that were left to the various institutes in the past are now done by the Financial Reporting Council of Nigeria. They are also involved in directly reviewing the quality of your audit files. The other regulators, including the CBN, for example, has begun to implement mandatory rotation of auditors. And then, of course, there is increased imposition of penalties by regulators, especially the Financial Reporting Council of Nigeria on auditors. What has all these things done? They've strengthened the practice, the audit quality, the audit environment generally. But in any case, to wrap up, I'll just say that as auditors, we have certain minimum duties. I talked about the need to not just attain professional knowledge, but to maintain it. The only way you can maintain it is by continuous learning. Continuous learning should not be limited to your just getting the CPD, the minimum CPD requirements by your institute. You should exceed that. You should go beyond that. You should not wait to start understanding specific industries. You're a generalist, so that you know what the key elements in specific industries are. You need to focus on the risk management at all times. Every audit is essentially a form of risk management for you as an auditor. The risk to your reputation, the risk that you will give a wrong opinion is the biggest issue for every single audit assignment. You need to be able to communicate very clearly with all your parties and communicate transparently as well. And today, technology is driving everything. You cannot say that when I was taught audit, I was taught to audit with pen and paper. So I want to stay with pen and paper. It's either you move on to adopt technology or you retire, knowing that your skills are now obsolete. So, in conclusion, I'll just say that the auditor has nothing to sell but his reputation, and that reputation is largely hinged on his competence, and that the auditor's responsibility is not to his client per se, but is to the society who rely on the opinion that he has issued. Thank you. Peace.
Certainly, I'm very sure that it wasn't just me that learned from his wealth of experience. Even has made us understand all that we need to know as an auditor and how we can, move on to becoming more credible. We have some questions. We'll be taking them shortly. But before then, we'd like to go into our last poll session for the day. I'm going to launch the poll now. Your active participation is needed. Okay, thank you so much for your participation. The question goes thus: how would you rate the importance of auditors' credibility in maintaining public confidence in financial reporting? Very high, neutral, low, very low. Our answer would be very high because we have learned from Eben that it's very important for auditors to stay credible so that the public will have confidence in the financial statement. We'll go into our question and answer session now. We'll be going through the question and our speakers will be talking on the questions. Our first question goes thus, and this question will be answered by Oluwaseyi Alabi. What's the role of management letter on audited financial statements?
All right. Now, the very first key thing we need to get is the fact that when we talk about the concept of management letter, this is a letter that is being written by the auditors, to communicate the deficiencies in the internal control during the process of the audit, and it's being directed to those charged with governance. So the very first key purpose is, to communicate the findings of the auditor. In the process of talking the other time, right, one of those key things we said was the fact that a very good auditor should be able to communicate clearly their findings to those charged. So management letter is the best way to communicate this. Another key thing is the fact that it focuses on deficiencies on internal controls. What are those key things that the company can improve on? What are those key things that when the company continue to, take charge of, they will get themselves better and also in prior periods. So some of these weaknesses are passed across using this management letter. The last point is the fact that management letters serve as the main source to pass auditors' recommendation to some of those key sources. So it includes recommendation, for how the company can addresses those identified control weakness, and this can actually help management also to strengthen their internal control framework and also to mitigate the risk of errors and fraud. Also, another way we can see this is that it improves and fosters effective communication, right, between the auditors and those charged with the governance. Thank you.
Thank you so much, Oluwaseyi, for that answer. This next question goes to Eben. The materiality of gifts bestowed on auditor might be a threat to the auditor's independence and credibility. How is materiality considered? Is it from the auditor's remuneration point of view or the client entity's materiality threshold?
Hello. Hello, have you lost me or?
Okay, I'll be taking the question again. The materiality of gifts bestowed on the auditor might be a threat to the auditor's independence and credibility. How is this materiality considered? Is it from the auditor's remuneration point of view or the client entity's materiality threshold?
Okay, thank you. Please. The issue is not the materiality of the gift is relative to the social economic environment in which the auditor operates, you know. But of course, if you want to weigh it, maybe you want to wear a legal cap, you may say it should be relative to the remuneration of the auditor. But the key thing is, it's better to look at it from the perspective of the socio-economic environment. What do I mean? In Nigeria right now, $50 is very, very material to most people that work as auditors. So if you are a member or a part of an audit team, and then the client decides that they're not going to provide you lunch, but they will give you guys $50 a day for lunch on that engagement. Now, it doesn't matter how much the audit firm was paid, but with $50 being equal to about 75,000 naira, you would say how much is the person's salary, right? It's the socio-economic environment. However, if you are auditing for our firm in the US, say you are working for RSM US LLP, and then you're auditing a company in New York, and the company decides that we're not going to be providing lunch, we're just going to give you a voucher or give everybody $50 to buy lunch. Now, $50 to buy lunch in the US and in the New York, say, Wall Street environment, it's not material. It's not as material as it is for those of us who live in Lagos, you know. So I think it is best to consider it from based on the socio-economic environment in which the auditor lives. Many years ago, for example, in the, when some of us were still learning the trade, in one of the firms, a global firm where we were working then, the materiality for gifts that you can receive from clients was $50. At that time, $50 was not so material, because so if you receive $50 or less, you didn't have an obligation to report it. A few years later, they dropped it to $20 because the naira kept falling. You didn't have an obligation to report a gift of $20 or less that your clients pay for you. Maybe your clients pay for a taxi for you somewhere, and it's not considered material. But in today's Nigeria, it will be considered material. So I don't know if I answered that question as asked.
Thank you so much, Eben, for that answer. So I want to believe that you have answered the question, because this even brought an insight that, okay, it's not based on the auditor's point of view or the client's point of view, but from the socio-economic factor. Thank you so much, sir. This next question will be going to Deborah Odubayo. How can auditors maintain their independence when faced with pressure from clients or management? I'll take it again. How can auditors maintain their independence when faced with pressure from clients or management?
Thank you very much, please. I think that The first thing that an auditor should do in this situation is to speak to someone that is superior, someone that's higher up. So you can speak to your manager about this pressure, possibly speak to your partner about this pressure. When you feel like you're being intimidated, you can speak to people that are higher up. If this does not help, you can involve a legal advisor just to ensure that your safety is paramount. So they'll bring another perspective, they'll bring more clarity to the situation. And if this continues to persist, I would advise that the author should consider quitting that engagement because your safety is very important and should come first. So if you are feeling like you're being intimidated by a client, you are being put under pressure by clients, and I advise that auditors should, in that situation, consider quitting that engagement. But that should be the last resort when you have no other options to consider. Thank you.
Thank
Let
you.
me let me add to what Deborah have said. Some of the, don't forget, we talked about threats to, if you go back to one of our slides where we talked about threats to independence, right? We just put question mark and we listed them. We talked about self-review. We talked about that is from the auditor's point of view, right? But for this question will typically be geared towards intimidation, if you like, where the client is threatening to withdraw the job from you, for example, if that job is material to your fee as a firm, for example, you begin to wonder whether you guys want to lose the clients or not. So this is what we tell people, that look, talk is cheap. What makes a person a strong person is your ability to stay true to your principles, even when the stakes are very high. So, and I think we as a firm, that is one of the reasons why today, in Nigeria, we're one of the leading firms, even though because we've been known to stay aligned with our principles when it matters most. And if a client needs to go, the client needs to go. So this is where the auditor needs to show resolve and spine, that they have integrity. So, and I think this is the biggest area and the biggest reasons why we have audit failures in Nigeria. Because take, for example, if you audit a bank in Nigeria, the fee will be very material to you. To now stand up to the banks and say, you know what, I'm going to qualify this account because of XYZ. It takes a lot of resolve, it takes a lot of spine, But what we have learned from experience is that once your professional competence is not in doubt, most times the client actually comes to learn from you through that kind of process and understand what they are doing wrong. And when they see that you are not intimidated, they actually respect you as a firm the more. Peace, you can continue.
Thank you so much, Eben, for that addition. This question will be going to Shay. What steps can auditors take to enhance their credibility in the eyes of the public? So what are those things that an auditor can do in order to be credible in the eyes of the public?
Okay, thank you, Peace, for that, right? The essence of credibility, just like I've said before, is all about how we want to ensure reliability of the audit reports that is being provided by an auditor, right? So one of the key things I would start by mentioning is the concept of independence, auditors' independence, which is one of those key things we'll be mentioning over time, right? Auditors has to be independent, both in appearance and in mind. If they're able to be independent both in appearance and in mind, trust me, the public will, the level of credibility and even public perception about auditors will be totally improved. Another key thing we can easily notice is the concept of rotational policy, right? One of those key things FRC gave recently is the fact that auditors are should be changed every 10 years, and even audit partners, right, every 5 years. Now, if these are being, followed through to the date and to the letters, we believe the extent of level of familiarity, between the clients now and the auditor will be totally reduced. And even some key things, threats like intimidation, will also be totally off the point. Another key thing I mentioned during the process of, talking the other time was the concept of communicating. One of the issues with Cadbury was the fact that they were unable to actually communicate one of the key issues they had during, the auditor, right, was unable to, communicate those key things they saw during the audit. And what we are saying is the auditor needs to clearly communicate their methodology, their procedures, and even their findings. And those things are very, 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 very important. Now, another thing I will talk about is self-review checks, right? So I believe in the concept of the fact that if I'm working, I need some other people to check my work, even if I'm higher than them. All I need to do is allocate this job to this person to do the review for me, even before it will go to the manager's level, before it will go to the partner's level and others. So at the end of the day, the level of material misstatements is totally reduced to the barest minimum. Another key thing, which will be the last point I'll be mentioning, is the concept of timely reporting, right? One of those qualitative characteristics, right, of very good financial statements is timeliness, right? The report should be available when the client needs it, right? What do we mean? If the client is saying, okay, I need my report within 2 months, don't take 5, 6, 7 months before it will be ready, because at the end of the day, it will not meet the actual decision it is expected to meet. Thank you, Pepsi.
Thank you so much, Shane, for that response. We'll be going on, and we'll be talking about this question. The question is, I would ask Eben to please answer the question for us. It says, how do auditors access and respond to the risk associated with cyber security threats during an audit without affecting the credibility of the financial statement and public confidence? I'll take that again. How do auditors access and respond to the risk associated with cyber security threats during an audit without affecting the credibility of financial statements and public confidence?
Okay, thank you, Peace. And I think the question was asked by an anonymous attendee. So the question is not exactly very clear, because it tends to say responding to cybersecurity threats during an audit. But cybersecurity threat is is pervasive in today's world for every business, So there are two things. If you have to look at the client's business model, right? And then look at the place of technology and the place of cybersecurity as a whole, on the client's business model. If the company's business model is maybe selling wholly online, for example, then that you have to put more weight, more time into checking the impact of cybersecurity threats on the elements of the financial statements, whether it's their profits and loss, whether it's or income statement, or whether it's their statement of financial position or balance sheet, as we used to call them. So, but when it comes to the audit itself into this world, we all use technology that is online. There's a rule of thumb that, every company or every business today that is a serious business should commit close to 15% of his budget on assessing and responding to cybersecurity threats, because the threats are everywhere, and there's almost no business you can do today without being online. One of the newest insurance um, package that is being sold globally, not just in Nigeria, by insurance companies, is cybersecurity insurance. So that is how big of a threat cybersecurity is, not just during the audit or even for the entity you are auditing, but for everybody that is doing business as a whole globally today. And that is one other reason why there's typically a technology expert on our own audit team, depending on the nature of the company that we are auditing and how big technology is in their operations. So I don't know if I have answered that the best way I can.
Okay, thank you, sir. You have answered the best way you could. So we'll be taking this last question, and it's going to Oluwaseyi Alabi. This is because if we can remember, he spoke about peer review and quality control processes. So this question says, what role do peer reviews and quality control processes play in ensuring audit credibility?
Okay, this, thank you very much for that question, right? Just like I've said, when it comes to peer review or when it comes to review generally, the main focus of review is just to ensure that we reduce the level of material misstatements in audit reports to clearly barest minimum, and that's the target. So the very first thing this peer review does is the fact that it spots mistakes. Just like I said, take for example, if I'm saying maybe one of my juniors or even someone that is on the same rank as me should do a review for me, it's because there's some things I will be seeing and he will be seeing. And one of those things is actually errors. One of those things is actually mistakes. So that's one of those key things that peer review does, right? One of those key things it does is also to ensure that the level of consistency in audit methodology are being consistently followed. What do I mean? There are methodologies, there are procedures that has to be done. Take, for example, for cash and cash equivalents. Now, the key question the person will be checking is, have I done the right thing? Now, if there are areas that I'm lagging behind, the person can come out there and say, okay, please rework on this, recheck on this. And the essence of everything is just to ensure that all the key audit procedures are being put in place. Then the last one I'll be talking about is the concept of documentation. That's very, very important. So everything we do, documentation to derive our audit opinions has to be documented appropriately. So if I'm not doing the right thing, anybody that is reviewing this can easily check this and tell me that, okay, this level of documentation, you are falling behind, you are lagging behind, and we have to steadily improve on this rather. So I hope I've been able to answer that question, please.
Yes, Shay. Yes. Thank you for answering the questions.
Please, sorry, just before you wrap up, there was somebody that asked a very important question. It's anonymous. Was asking whether ISQM1, ISQC1 has been replaced, and the answer is yes. It was replaced effective December 15, 2022, right, with the ISQM1, and the difference between the QC and the QM, even from the name, one is talking quality control, the other one is talking about quality management. And I think the biggest issue is that one focuses on engagement level quality control, and one is talking about quality management from the firm as a whole, the perspective from the firm as a whole, with the managing partner, for example, being responsible for a lot of things, and a lot of things being firm-wide, not just restricted to audits or performance of an audit engagement, So I just thought, and all practices have since been required to migrate to implementing ISQM1 instead of ISQC1. I just thought I should add that.
Thank you so much, Eben, for answering that. We won't be taking more questions, but do note that if you have any more questions, you can reach us on our email at info@stransact.com, or you can even call the number on your screen. You can also check for more of our services at www.stransact.com. Do well to follow us on our social media pages and stay updated through them. We extend our sincere gratitude for your valuable time and active participation in today's session. And we sincerely hope that you have learned a lot from this session. Thank you. Thank you.